Well, hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Thanks for watching our Friday Insights. Today we're going to dive into cryptocurrency. I'm going to give a little sort of high-level overview, just enough to sort of scratch your head and keep asking more, and maybe we'll continue on the path of more cryptocurrency, Education 101. And that's really our goal here today is education. You know, this last week, especially with the exchanges having a new direct-to-market cryptocurrency exchange hit the marketplace, a lot of clients obviously have been asking a little bit more about, and the curiosity, if you look at what cryptocurrencies have been doing for the last 12 months, have been increasing in value. 2020 was a great year for them, but now even 2021, year to date, they continue to hit all-time highs. Now, ultimately, Robert, what is a cryptocurrency, or let's say specifically the largest one, the one that's known by everybody, at least by now, is called Bitcoin. And Bitcoin basically is a belief, and it's a digital currency that has been created by a decentralized location of all these computers around the world that basically create one little, call it an identification, okay? So there's a cryptocurrency that has a identification number on it. There's a certain number of units, and so it's decentralized. All these computers around the world come together to verify transactions, verify currency, and verify ultimately along the way the blockchain. So as it evolves over time, ultimately why that's important is it's a belief in a store of value. Now, if you look at the US dollar, through the evolution of way back when and the civilization of just exchanging currencies back then for goods and services, we're talking centuries ago, even the seashells were used for apples and oranges, and you needed an exchange of value, or an IOU, back in the day to actually convey this transaction and actually make it happen. And then fast forward to United States, the US dollar and the gold standard. You know, FDR took us, made strides to take the United States off of the gold standard, and Nixon in 1971 ultimately removed the United States from the gold standard officially. And ultimately before that, the U.S. had the ability with the U.S. dollar to have a gold back that currency. Now go forward to 2021, the United States is based upon the dollar's values, based upon the full faith and credit of the U.S. government and policymakers. Now, what have we learned this year, last year, and last few sort of decades, if you will? Centralized governments, the United States Federal Reserve, as well as policymakers in Washington, spending money like it doesn't need to be repaid. Well, that's a major concern, right? We talk about it here at Blanke Schein Wealth Management, and the United States, when they continue to print money, they're devaluing the currency. They're also inflating adverse effects within sort of the currency. And, enter cryptocurrencies. That's where Bitcoin and the bunch of cryptocurrency really, for a few decades now, people have been thinking about ways of hedging their bet on the US dollar, because the centralized government right now in the US currency, and think about this, since 1971, since we went off of the gold standard and now we're considered a fiat currency. A fiat currency is just a currency that's controlled by a government, right? So the policymakers really determine what our US dollar is worth, right? And so you also get the digital age, the advent of the digital age, and all of this technology pulled forward. You get cryptocurrencies, and there's all these coin and coin-based solutions for the exchanges, and that's where it's getting really interesting. Now, what's even more so is that right now, Bitcoin, there's a certain number, a limited supply. They add a little bit more every year if you're mining it, so on and so forth, but it's really nominal. But the bigger picture here for the coin-based solutions right now is that they're defined, right? And here's another sort of bigger deal. These are everyone out there in the community. One way to think about it: nice little happy people here, here, and here. They're using their hard-earned dollars to buy Bitcoin, okay, on the exchange, and to ultimately transact into what they believe is a new store of value. Again, a hedge to the US dollar and dollars around the world, because central banks are just printing money like it doesn't need to be repaid. Hence, Bitcoin and all the other coins in the crypto world are getting major attention, because economics will play out at some point in time. And here's the major difference. The US dollar as I said before, these are people out there, and maybe that person's not so happy, but there are people in the United States or anybody who owns US dollars. The government here literally determines what the value of the US dollar is by the way they have policies, taxation, and sort of all the manipulation and that we're seeing happening by policymakers. So in this case, the US government controls the value of the dollar. So they dictate outward in from policymakers out to all of us in the community that have dollars in our pocket. Here, the community puts their dollars towards the Coinbase. They got a digital currency, a coin that's in their name, in a digital wallet, if you will. Don't want to get too technical, but the reality is that this is a community that believes in the full faith in behind here versus here, everyone's just taking the faith of the government. So you see investors like Elon Musk saying, wait a minute, I'm going to take a hedge. I'm going to take some of this money because the US government is basically inflating or creating inflation, or they can print money, right? We have another $2 trillion, let's say, infrastructure bill that's going to be passed. Maybe, maybe not. Who knows what it looks like? The reality is that Washington is spending money like crazy. It is no, it's not even like, there's obviously one of the cause and effects of why cryptocurrencies are really hot and rage right now, simply because it is a belief that this community and these coins that are decentralized, okay? These are all computers around the world that are all verifying all these transactions, but there's more faith and belief right now at this moment in time. Things can change. And in this Bitcoin digital currency, because there is sort of a supply and demand effect, there's always limited supply. Here, US government and governments around the world, their central banks can continue to print money to ultimately get out of recession and stimulate the economy and so on and so forth. So you're actually seeing a real world supply and demand and sort of full faith and credit on one side versus faith in a belief system of a currency on the other, and economics coming to bear all at the same time. But what is this ultimately telling us is that there will be a currency at some point in time. It may or may not be Bitcoin. There's Ethereum and all the others. There's several different coins out there that are actually making a play for ultimately a hedge against what people believe right now is concerning about the way our governments are actually, and the policymakers are creating and handling the dollars. Now, another reason why Bitcoin and all of the cryptocurrencies very specifically have this faith, if you will, is because it's transparent, right? You can go in and see every transaction since inception, and you could also have sort of the digital lock, that vault that really keeps it safe. So that's really building this crowd and this community together and saying, wait a minute, there's supply and demand, we have transparency as a hedge against inflation, again, complete transparency, and it's sort of a sort of this full faith and credit in the United States dollar of policymakers that can tax and spend and print money. It's a great sort of hedge, if you will, an alternative solution that is basically just based upon faith. These are both based upon faith if we actually think about it for a little bit. Now let's talk about the size of the marketplace itself for cryptocurrencies. As of right now, the crypto market is $2 trillion. If you take the US banking system right now, all of just the banks right now, that's the same, $2 trillion. So this is legit. If you take all the US banks right now, the big money center banks and all of the big investment banks, and put them together, add their market valuation up and market capitalization, they're equal to the crypto space around the world. It's incredible, right? If we look at the World Financial Index, take all the banks around the world and add them up together, that's $8 trillion. So this thing could quadruple, meaning cryptocurrencies, if they quadruple, they could equal the banking system of the world in terms of market capitalization to all the financial institutions. So is it big? Absolutely. Is it something that policymakers here in the United States and around the world are taking notice? You better believe it. Why? Because it's all about control now. So it's all about how this plays out. Who knows, right? This, like both of these, who knows how, the dollar from day to day is a store of value based on full faith and credit in the United States, and Bitcoin's based upon the community's belief that this is a better alternative in terms of transacting and transparency relative to anything else out there, or even the cryptocurrency world itself. So again, like anything, we will continue to follow and monitor this for you and continue to bring updates, but it's a very fascinating world. At Blanke Schein Wealth Management, we're spending a lot of time on it because our clients are asking for it, as well as we want to be educated and stay ahead of it. So we appreciate your time today, and as a Friday update insights, hopefully you learned something about sort of the easier way to think about cryptocurrencies in general and how they sort of are different and similar to the US dollar as well. So thanks for watching. Take care. Have a great weekend.